Hello everyone, welcome to Commodity Daily Podcast for 9th February 2026. Myself Neha Qureshi, research analyst at Anand Rathi Commodities. Starting with precious metal, gold has stabilized after a sharp sell-off we saw in January. Strong dip buying emerged around $4,700 to $4,500 zone, helping price rebound. Volatility stayed high as excess speculation got washed out. Margin hike pushed weaker player out, and a stronger dollar earlier in the week added pressure. Safe haven demand eased slightly due to improving US Iran diplomatic signals, but gold managed to recover as the dollar softened and bargains hunters stepped in. A key positive is central bank buying. China added gold to its reserve for the fifth straight month, reinforcing gold's long term strength, even as silver remained more volatile. So, gold outlook, the key level to watch is $5,000. Holding above it opens the door for 5,090 to $5,140. A failure could push gold back towards 4,750 to $4,540. Market are watching US jobs and inflation data for direction on the Fed and the dollar. Coming to base metal, copper ended the week slightly higher, near $12,994 per ton, supported by a weaker dollar. Earlier in the week, prices corrected after a strong China led rally pushed the market into overbought territories. Sentiments improve after China signaled possible strategic stockpile additions, helping prices recovery. However, demand remains soft. High prices are weighing on manufacturing, and several Chinese copper plants are planning longer production break. So base metal remain range bound amid a cautious global environment. Holding above key level mark can see the sentiments into positive. Coming to crude oil, oil prices snapped a 6 week rally with Brent and WTI down over 2%. The main drag came from the US Iran tension, reducing geopolitical risk premium. A firmer dollar and a profit booking added pressure, while rising US rig count signal increasingly supply. So crude remained weak but ranged bound. Market will watch Middle East development, US data and Chinese demand signal. Coming to currency outlook, USD INR, the focus in Indian market is on foreign portfolio flows. The rupee closed near 90.65, gaining over 1% on the week, supported by equity inflows. Foreign investors have bought around $9,000 million in India equity so far in February. In bonds, the 10 years yield is expected to trade near 6.7% to 6.80%, with attention gradually shifting to the next RBI policy meeting. So key support for USD INR is 90.30 to 90.50. A break below 90 is possible if inflows continue. So overall market are cautious. Gold is stabilizing, base metals are consolidating, crude is under pressure, and currency are driven by flows and data. So that's all for today's commodity outlook. Stay tuned and trade smart. This is Neha Qureshi signing off.